So in today's live stream, we're going to start by talking about the dollar, what we're looking for to see in the marketplace. So today's date is 26th of February, and thank you so much, Ray, for your confirmation. So today's date is 26th, so we have 3 days left before the end of the month of February. So which means that we're in anticipation for a new monthly candle in the next 4 days. So in 4 days' time, there's going to be a new monthly candle. And this new monthly candle, we're going to be anticipating for it to run either it's going to be a buy side liquidity or a sell side liquidity, right? Now, that being said, as you can see, we're still currently in this range, this inefficiency. And if we go to the weekly time frame to see what the weekly time frame is doing, and on the weekly time frame, you can also see the inefficiency resting right here as well. Then we'll scale down to the daily. Now, on the daily time frame, right here, we'll have this low, we'll have this high, and then this right here. In as much as on the daily, this is not really the most significant lows on the daily, but as you can see, we'll have this high right here. Now, in as much as this is not the most significant low, but let's say we'll call this a low because price dropped down, created a new high, right? If we are to say that right here is a break of structure, that will be us trying to identify this for what it isn't yet. Because personally, before I confirm a shift in market structure on any time frame, whether it's going to be on daily, weekly, monthly, 4 hour, 1 hour, whatever time frame it is, I like to see something like this: a low, a high, and then I want to see a break, right? And then I want to see price close below that low. Does that make sense? I want to see a close, even if it's 1 pip close below that low. I want to see a close below that low for me to say, yes, this is a confirmed shift in market structure on that time frame. But in this case, on this time frame, I don't consider this a break of structure. And the reason for that is because I cannot identify any break below this previous low and close below it. I cannot see any candle break and close below it. There's no break and close below this low, none. All I could see is that price ran liquidity from the previous low and then closed few pips above the low, which brings me to the thought process that this could potentially be a run on liquidity, and then price may still want to rally to take out buy side liquidity for the new monthly candle. So even if the overall market direction wants to go to the downside, the upside could be the next target. Now, one thing to note in the marketplace is that if you are anticipating for price to go to the downside, the first thing you should focus on is what is going to be resting at the upside for price to come to take that liquidity right here and then go to the downside. If you are anticipating for price to go to the downside, look for areas that price is going to come back into at the upside. Identify those areas and wait there. When price comes there, you sell. So this is basically what I'm anticipating to see in the marketplace. I'm anticipating to see a run on buy side liquidity. If we're going to be bearish, I want to see a run on buy side liquidity before a run on sell side liquidity, resting right here. And this right here is also an added confluence for me because price dropped to the downside, took liquidity, mitigated this candle right here. This is another block. Price mitigated this candle. And if we had mitigated this candle and went beneath the 50% and closed beneath the 50%, now I would have said, yes, we are definitely going down. Every up move, sell it. Every up move, sell it. But because we didn't even tap into the 50% and we just tapped at the open of this candle, you can see that right there. We mitigated the open. You can see how price dropped into the open, and then we saw this rejection of that position. So a lot of things are showing me that there could be a potential rally on the dollar to take out this buy side liquidity. So I've shown you the first one being the run on liquidity for this sell side. The second reason, we had this remnant of this inefficiency right here. Price came back to fill it and still failed to close below the inefficiency, failed to close beneath the 50% of the order block. A lot of confluence is showing me bullishness that dollar could potentially hunt for this buy side liquidity. Now, another confluence that I'm also looking at that price could potentially go to the upside is also something I'm going to point out to your attention as well. This last up move, this last up move before it dropped down, the bodies of the candle. I'm always interested in the bodies of the candle more than I am interested in the wicks, because the bodies of the candle is where the volume is resting. The volume in the marketplace is resting at the bodies of the candle. And as you can see, the bodies of this candle hasn't been tapped. So price could want to drive into that position, rally into that position, tap into the bodies of the candle before we could see anything else in the marketplace. So if we're going to be bearish overall, the bodies of the candle will be the perfect position for price to tap into. And we also have remnants of this inefficiency resting right here as well, which means price can decide to come all the way up if it wants to. I'm not saying it will, but it can do that if it wants to. There's a lot of room right here for price to come up, and the bodies of the candle hasn't been tested, right? Now, these are the few things that I'm looking forward to see in the marketplace moving forward this week. And one of the reasons is because we're entering a new month. There's going to be a run on buy side liquidity if we're going to be bearish, and if we're going to be bullish, then I anticipate to see a run on sell side liquidity. So you see how this works. Now, if we are going to be bullish, we expect a run on sell side liquidity. And what do you see here? A run on sell side liquidity. Price has taken sell side liquidity. So which means that it's even a higher probability to look for buys on the US dollar and US dollar XXX pairs to rally above this high. And it is a lower probability to look for buys on euro right now. And now, after this analysis, we're going to look at euro as well. And then we're going to check the two between the dollar and the euro, look at the confluence between both pairs, right? Now, the next thing we're going to do now, we look at the weekly. Let's wipe everything on our chart. Now, looking at the weekly, you can see the inefficiency here. Price came down, mitigated it. And then look at how we still failed to close inside that inefficiency. Each time price taps into it, it rallies away from it. Each time it taps into it, rallies away from it. And look right here, the bodies of the candle right there. You can see that right there, the bodies of the candle. Price could want to rally into that body of the candle. And if we do rally into that key level, creating a new high and tapping into that position, what it means is that we've created a structure, high, low, and high. And if for any reason we reject up that position and drop, that's a weekly break of structure. And if you do see a weekly break of structure, it's game over. Weekly, monthly break of structure could literally send price to astronomical positions. That could easily send price running below this low. And this will be next. If this goes, this will go. And if you're catching such a trade, that could literally be about that could literally be about I don't even know if this is correct because it's showing it's going to be about 5,000 pips. Because now I'm like, but yeah, we're talking about the weekly time frame. So that should be a lot of pips. That's like 5,000 pips. So if you're risking $10 per pip, you could literally make like 50,000 on just one trade without so much stress, just focusing on just one trade setup. Sometimes it's not really one thing with trading, it's not really all about getting into a lot of trades. It's even better to focus on just a few trade setups that are high probability and getting into them at the right places. So now the next thing we're going to do now, we're going to look at euro and then see areas that we could potentially be waiting for euro to come back into. So for the dollar, now you can see we have a high, a low right here. We'll have this high right here. And as you can see, we'll have a break of structure and then price came back down. This is our area of interest. This area right here is our interest. But as you can see, price didn't come into the area. And if we go to 1 hour time frame, this is the main key level. And as you can see, price tapped into the key level. We saw this rejection. So two things are involved. It's either we're going to want to run a sell side liquidity, be in this position. It's either price will want to run it and then go to the upside, at least into this inefficiency. This could be the drawn liquidity to attract price to the upside. So if price, I will anticipate to see a run on liquidity before an expansion if we'll go to the upside. So this means that if I'm anticipating to see a run on liquidity to run sell side before the buy side, I'll also be anticipating a run on liquidity on euro to run a buy side before a sell side. I'm going to explain what that looks like on the chart as well. For dollar, I've explained that. So if we want to see price go up, we'd like to see a run on sell side right here before a run on buy side, which is right here. Does that make sense? If you have any questions based on what I just said, you can drop it in the chat. So now looking at euro US dollar, we're gonna start by going from the monthly time frame. So on the monthly time frame, you can see that we came back down into this inefficiency, mitigated the inefficiency. All we would like to see after this mitigation is a 4 hour break of structure. And right here, we'll have a 4 hour high, 4 hour low, and we'll have a break of structure. Right now, after this break of structure on the 4 hour, what we'll be anticipating to see before we continue higher, because overall I remain overall bullish on euro. I still want to see higher prices in euro, but in the meantime there's a high tendency that price might want to run sell side liquidities, and the sell side liquidity that I'll most likely be interested in seeing price rally above it is going to be a 1 hour or a 4 hour low. So let's start from the 8 hour time frame to see the lows from the 8 hour time frame. And right here on the 8 hour time frame, you can see that we basically have this low creating this high and then creating this low and then overall creating this high, because this right here is not a low. This is not a low. This is just consolidation and then price expanding higher to rally into this key level, which is the extreme premium zone within this high and low. So this is not a low. This is the only significant low. So we're going to be anticipating for two things to happen, right? If we want to see higher prices that could potentially rally above this overall high, we will be looking forward for price to do one or two things. And one of them would be to come back into this key level, either to mitigate the bodies of the candles or to run the liquidity, the sell side liquidity before a rally. Because if we are to see the big impulsive move we anticipating to see in the marketplace, It's going to be so hard for price to make that big impulsive move without first running sell side liquidity, because the algorithm already understands that a lot of institutions are already in a buy, and a lot of retail traders are also in a buy, and they're holding on to that buy to run the buy side liquidity. But they don't want you to make that kind of money. They don't want you to be in a trade that like about you'll be making about 400 pips on just one trade. They don't want you to do that. So the algorithm will do whatever is necessary, whatever that is possible to take you out of your position. That is the reason why a lot of the times we place a trade and price just goes straight to the stop loss, take it, reverse, because the algorithm understands that so many traders are going to have their stop losses resting right here, and look at how they came, took them out, and then they sold again. They knew your stop loss will be here, and they came back again, took you out again, and dropped, because they knew that you were gonna put your stop loss right there. Just the same thing that happened here. You trade your stop loss to this high, they took you out, they dropped. And then let's say the other party that didn't trade their stop loss right here, that left it here, they trailed it here the moment price dropped, and they came back, took the previous high, and dropped again. And then the other people who didn't trail their stop loss were like, oh yeah, now we can trail our stop loss. And they trailed theirs to this place, and price came back, took them out, and still dropped. So now you see how many times it's actually done that. One, two, three, four. Four times. The run on liquidity happened four times. This is why sometimes I'm really not so in a hurry to trail my stop loss to break even, because anything can happen and they'll just run you out and then still go towards the direction. That is why if you're placing any trade, you need to have it at the back of your mind that this trade could go into a loss and I could lose this money I'm risking on this trade. There's a high chance that you can lose that money that you're placing on that trade. That is why you never over leverage, because over leveraging, you don't know which trade is going to work and which one won't work. All you do is to execute. Now, the thing, how you become profitable is out of 10 trades, you take every single one of your setups 10 times. Now, if you are looking for a 1:3 out of 10 times and you win just three times, you are 9% in profit. If you lose the remaining seven, you've taken 7% loss. So you are in a profit of 2% after losing seven trades, trying to make 1:3 risk to reward ratio. So this is how it works in trading. You can lose more than you win. You can be having more losing trades more than you're having winning trades and still be profitable, because you're working with the probabilities, using good risk management, and always executing your strategy the way you see it in the marketplace. Now, one thing to reduce the losses is just focusing on the trend, right? Focusing on the trend is very essential. It can help a lot. But the downside of focusing on the trend is that you're not going to be in so many trades, and sometimes, if we don't get into so many trades, we start feeling like, oh, I guess I'm not using my time well enough. And then you start seeing counter trends and you start feeling like, oh, why am I not getting into this counter trend trades? But at the end of the day, the more times you enter a counter trend trades, the more you will even take losses, because you are trading against the trend. It's just like you're in a canoe or in a boat and you're trying to paddle your canoe against the wave. The wave is flowing to the east and you're trying to paddle to the west. You see that it's gonna be a struggle. You need to paddle alongside the wave, and it makes it so easy to flow. And even if you capsize, it's easy for you to know which way the river or the ocean or whatever is flowing, and you can recover and then get back on track. But counter trending, when you take a loss, you may not even know why you took the loss. But when you're trading with the trend, when you take a loss, you understand why you took that loss, because it's probably because price is hunting for liquidity before continuation, and probably your stop loss was the liquidity and it's taking it out, and you have an opportunity to re-enter into the market because you're trying to trade with the trend. Now, that being said, we're going to go back to our analysis on Euro US dollar. And so far on Euro US dollar, you can see we have this inefficiency. and you can see how price rallied into that inefficiency. And so far, if we look at this right here, you can see that it's also closed above this inefficiency, right? So, which is still giving me that confluence that this has a higher chance of rallying in the long term, right? Now, another thing I'm going to look at is the monthly, what the monthly is showing us. We already mitigated the inefficiency. Let's look at the daily. On the daily, now, this was one thing I saw on the dollar, and I was trying to bring it to your attention. We created a high, a low, and a break. We broke this high. You can see that very clearly. This high was broken. Let's compare that with what we see on the dollar. So as you can see, the dollar is below. So let's look at the daily time frame on the dollar. So right here, this is the low on the daily time frame. This low, and as you can see, there's no break below this low. Price took liquidity from this low and then rejected off that position. It hasn't closed below this low. So for me to say, okay, the dollar has shifted, I want to see a close below this low. And there's no close below this low. But as you can see right here, there's a close above this high on euro, showing me a break of structure on euro. Let's flip the chart on the euro so we can compare the two as well. Now wipe my chart. So you can see on the euro right here, this is the low, the same low right here on the dollar. You see now they look very much identical. The same low right here is the same low right here. High, high. Then this is the low on euro. It got broken and price closed below it. But on the dollar, it didn't break. It just took liquidity from the low. And then right here, you can see it didn't close below it. So dollar still has a tendency, a high tendency to rally above the buy side, which means that euro euro has a tendency to also go to the downside. Now, euro going to the downside doesn't mean that euro is going to take the overall low, because I've seen this happen before. I'm going to share with you an example as well. Now, if you look at this monthly time frame right here, you can see this inefficiency here on the dollar. You can see how price tapped into this inefficiency on the dollar. Now, I'm going to show you still the same price action on euro. Now, this is the same price action, the same inefficiency. What do you see right there? So let me invert the chart so they both look identical. So you can see right here for euro, the inefficiency is there. And for dollar, the inefficiency is there as well. So both are looking like the same chart right now. This is euro, this is dollar. This is the inefficiency on the euro. This is the inefficiency on the dollar. Look how the price tapped into the inefficiency on the dollar before dropping, and look how euro failed to tap into that inefficiency because the dollar has already mitigated it. So euro was satisfied with wherever it was at that point. It was like, I'm cool where I'm at, and I don't have any reason to go lower because dollar has already mitigated the inefficiency. So all I need to do now is to follow dollar and go towards my own direction. Go towards the opposite direction with the dollar, because the dollar was trending lower, euro was trending higher. Right here, let me invert my screen back so you can see, understand what I'm saying. So you can see that euro was satisfied with coming here and taking this liquidity and rallied, while dollar was satisfied with mitigating the inefficiency and rallied. Now, that is why the reason I'm bringing this to your attention is because I need you to understand that in as much as I'm anticipating for a run on buy side liquidity on the dollar, that may not be the same case for euro. Euro may not want to run a buy side liquidity, a sell side liquidity, because right here is the overall sell side liquidity on the euro. But right here, we have a significant sell side liquidity on euro. this low right here is a 16-hour low, 8-hour low, 4-hour low. So price can literally want to run this low, and it also aligns with this daily liquidity right here. So price can actually want to run it, because anyone who was in a buy position on euro, definitely their stop loss will be right here. I don't really think anyone who is still on this euro buy, their stop loss is not going to be at, there's no way they would not have trailed their stop loss at least to this low, or this low, or this low, or this low right here, or here. Most people right now that were on the trade, like personally, if I was on this trade, my stop loss would be here. If it wants to reverse and take me out, that's amazing. I would take that win, because it's still a win, because you got in around here, stop loss right here. So now, the one place that most of the stop loss orders are going to be resting on the euro is right here. 90% of traders that are in this buy, at least over 70 to 80, 90% of traders that got into a buy from here, their stop losses are definitely going to be right here or higher. So now, this is what I'm anticipating to see on the euro and also on the dollar. And I think my time's literally up. But in the next live stream, we're gonna look at gold, look at the key level where gold is currently resting right now, and look at the opportunity that could present itself from those key levels, whether we're going to be looking for buys or sells on gold as well. I'm going to annotate that and do the analysis. We're going to look at USD card, key levels that I'm watching on USD card as well. We're going to talk about that as well, while we also look at GBP AUD. we're going to look at that as well and see areas that we're anticipating for price to come into. So another one, we can also look at GBP JPY, what price is doing. We can also look at GBP US dollar as well. After that, we will also look at the cryptos, look at what Bitcoin is doing, look at what other crypto projects are doing, the crypto projects that I'm watching personally. And we will look at that as well. And we'll also look at the indices as well. So if you also have any pair that you want us to look at in the other live streams, you can also drop it in the chat so that I can take time to do the analysis and then talk about it on the live stream. So I appreciate you all for tuning in, and I'll talk to you all in the next live stream.